1. Okay. This is P1-45A. Okay, so what do we have here? What do you guys see? We got the accounting equation, right? We got assets equal liabilities plus equity. So everything comes back to this accounting equation. Then what they're doing is under the asset section, they're listing a bunch of different assets that they're going to be using. So you could consider each of these things a different account. Cash is an asset. Accounts receivable, A/R is an asset. Office supplies is an asset. Furniture, right? Everything the company owns. And then you get to the other side of the equation and then you got this liability section. It looks like they only have one liability called, what's AP mean? Accounts payable, okay. And then they got the equity section and they broke it down. They really broke it down into a lot of detail because what they're actually doing is they're showing the two components, right? Common stock and retained earnings. And then they're going into a lot more detail, kind of like we did in the last example, where they show all of the different things that go into retained earnings, but they don't just show it as net income. They break the net income down even further into revenues and expenses. So if you were to draw a bracket here between these last three items, you see service revenue, rent expense, and utility expense. If we were to put a circle around that, those are your net income items. If you think back, right, remember revenues and expenses go on the income statement. Okay, so what they're going to do now is they're going to give me a list of transactions. So we're actually getting into doing some real primitive accounting, if you want to call it that. We're not really using our accounting tools yet, which are debits and credits, to record these transactions. But we're going to record the transactions in this table so you can kind of get an understanding of how different transactions affect your accounting equation, which we could call our accounting system in this demonstration, right? That equation is kind of like our system right here. It's going to accumulate everything we need, okay? So I'm going to look at my first transaction. It says February 5th. This company, right, it's going to be it looks like this lady or this man, Aaron Schoen, is starting a CPA business, okay, and incorporating. So what he did was he took $55,000 and he invested it into the company in return for common stock. Okay, so what we're doing is we're keeping the company's books. So all of a sudden we got $55,000. So our cash goes up by $55,000, right? The company now has $55,000 more in cash. Everybody can agree with that, right? Positive $55,000 here. Now, since, right, in accounting, there's always two sides to everything, right? It's a double entry accounting system. So in exchange for getting the $55,000 in cash, the company is now going to issue $55,000 worth of common stock, or in this case, yeah, common stock. So on the other side of the equation, you see the equal sign here? On the opposite side, to keep the equation in balance, there has to be another $55,000 effect. Okay. Did everybody kind of follow along with theirs? All right. Okay, so I got nice work. Did somebody get good job or excellent? There's these little affirmations that come when you do it right. And they're green, they're not red. So it's supposed to have some kind of psychological, you feel better because you got something green and not red, okay. Okay, it says February 6th, we paid $350 cash for letterhead stationery for a new office. So, as soon as you see the word paid, what are you thinking? Yeah, cash is going to go down, so you're going to have $350 decrease to cash, okay? And then on the other side of it, it says they're buying letterhead stationery for the new office. So they're actually buying a supply. This is not a supply cabinet, but they're buying stationery. So now their asset, their office supplies, go up. See, in this case, I don't have to do anything to the right side of the equation because this is a wash. It has a canceling effect on the left side, right? The $350 increase is offset by the $350 decrease, both made to assets, okay? And then what you want to do is you want to subtotal this. So what do we have? 54,650? Wait, that sound right?
Yep.
54,000, right? Okay. Now what you want to do in a problem like this is even, you're going to have to balance every account. Okay, so some of these accounts don't have anything in them. But I'm going back and I'm doing a subtotal. You see where it says BAL, where my mouse is? That means balance. So that means add up the effects of what happened, or, add and subtract to get to what it should be. And then you want to eyeball, right? You want to make sure that everything on the left, all of these balances on the left, add up to all of the accumulation of all the balances on the right. Otherwise, you don't want to click. You wouldn't want to click check answer. See, I got good job this time, right? Now, on the 7th, and I'm looking over here at my table, February 7th, we purchased office furniture for the office on account. Okay, so what two things are going on? Just read that that line there.
Getting furniture, you're charging me.
Okay, so we're getting furniture, we're getting an asset, so we could take care of that right away. What account is going to increase? Well, related to what Hunter and I are talking about, what account's increasing? Well, the furniture account, first of all, right? Yeah. So furniture is going to go up. And you're correct about accounts payable, but let's do this in sequence. So furniture goes up by 9,900. But we didn't pay cash for it. We did it on credit, like Hunter said. So that's accounts payable. Notice 9,900. So both sides of the equation have now increased by 9,900, holding everything else constant, right? And then we go back and we balance. So 54,650. Don't forget to put zeros in when zeros pertain, right? And I'm working with the previous balance and adding the most recent transaction. Okay, so that's why I'm pulling that 350 down. 9,900. Okay, 55. Does that make sense so far?
So,
Yes. Oh, I got well done this time.
so if it says on account,
That's
that's an account payable?
It depends, right? If you buy something on account, that's an account payable. Because you bought something but you didn't pay for it, right? You did it on account. Now, if you sell something on account, right? If I sell, I don't know, this is a CPA service, so maybe we sell tax return work, right? We did tax return work, but we didn't get paid right away. We did the work on account. We sold something on account. So that would be an accounts receivable, because we're waiting to receive the money, okay? But probably 100% of the time when you say on account, that means you didn't get the money right away, okay? Does that make sense to everyone? Okay. What? It's on credit, yeah, it's credit. It's credit. Yeah, yeah. So you're either buying it on credit or you're selling it on credit. You're extending credit to a customer. Okay. Once you get that part's kind of easy. Let's see, 210, February 10, consulted with tax client and received $4,000 for services rendered. Okay, so this business is a service business. We have clients that we do tax work for, okay? So what happens is Sean did some tax work and they got paid right away. So it's not a situation where we would be waiting to get paid. So what's increasing? Cash. Cash, good. That's the first one you pick out is cash. And what else is increasing? If service revenue, right? If we do work, we earned revenue. So service revenue over here on the left side is going up by 4,000. Okay? So what do I have? 58,650? And then don't forget to balance every account. That might sound kind of silly, but we're always balancing accounts. Okay, we're always trying to figure out, or always trying to maintain what the current amount in that account is. So if it's zero, it's zero. You put the zero in. Okay? This time we got excellent. Okay. Now on February 11, it says we paid utilities. So you got that verb, that past tense of pay. What does that trigger in your mind right away? Pay, pay. What account is involved in something being paid? Cash. So that's a negative effect because that's money going out. So $340 being subtracted from cash. And then we paid for utilities. What are utilities? Utility expense, right? Now, in this case, utility expense, how do you want me to show this? Yeah. It's already showing subtract, right? That's a kind of a curveball here.
So it should be a positive.
It should be a positive, you're right. We'll see though. 58,310. Does that look right? I'm doing the math. And then we'll just balance again. You know why it's showing a subtract over there? Is because expenses have a decreasing effect on equity, right? Expenses reduce net income, so therefore they reduce equity. I think we're okay because that's showing as a negative, yeah? Okay, let's see. One or more of the balances are incorrect. Carefully check your calculations and remember to enter a zero. For any zero balances, please try again. Maybe we did the math
I
wrong.
think he did
4,400
4,000 is 4,400.
instead of 4,000.
Your service
Revenue.
Oh,
You just-
okay. Is that all it is? Hey, good catch. You guys got good eyeballs. That one we didn't even have to add. It was just a matter of bringing that number down. So be careful. Okay. And I think if you don't put the zero there, it'll mark you wrong too. Okay. You know where there's zeros. Okay, February 12th, we finished tax hearings on behalf of a client and submitted a bill for accounting services of 10,000. Now, what is this? What is that 10,000?
It's receivable.
Okay, but what is it though, really? Accounts receivable is going to increase, but what is the 10,000?
Services rendered.
Yeah, it's services rendered, so it's revenue, right? Because whenever we earn money, it's revenue, whether we collected it or not. So because they did the work, they earned the money. We got to put that on our income statement as revenue. So we're going to put $10,000 in there on revenue, and we didn't collect it, so we don't have the cash yet. It's going to be sitting there in accounts receivable, waiting to be collected. Okay? It's a good payday there. We just have to collect it. Sometimes it takes a little bit of effort to collect too.
Sorry, that was worded a little bit funny. So it means the client is paying $10,000 to the
Gonna pay.
They're gonna pay. Yeah.
right.
So what it is this company had a client that needed to be represented in court, maybe, on tax issues, or represented before the IRS. So say you're the client and I'm shown. So I took care of this and I prepared it, and then we met with the IRS, okay, and I did this work for you. So We sat there and we took care of this, okay? And then as we were leaving, I gave you a bill. I said, you owe me $10,000, right? You owe me $10,000, but because I did the work and we're doing accrual accounting, I'm going to show it as revenue because I did the work. I earned it. I don't have to do anything else to be entitled to that $10,000. I just haven't collected it yet. You haven't written me the check. So I'm going to show it over here as accounts receivable. I'm waiting to collect that $10,000. Okay? So the client did not pay. You did not pay me the $10,000. You owe me the $10,000 because I did the work, right? So that's the difference between cash-based accounting and accrual accounting, because if it was cash-based accounting, we wouldn't show it as revenue until it was collected. So even though I did the work here in whatever month this is, January, and if we were cash basis, I wouldn't have any revenue in January related to that. Maybe you pay me 3 months later, that's when I would show the revenue, right? So we're doing accrual accounting, we show the revenue when it's earned. And how is revenue earned? Services rendered are goods supplied, provided, right? Hopefully I pulled everything down correctly. Nice work. February 18th, we paid the rent. So here comes that verb again, paid, right? That should just automatically in your head, paid means it's coming out of what account? Cash, right? So there's going to be a negative 1,100 effect on cash. And then what is rent? Rent is a cost of doing business, right? It's a cost, it's an expense, right? So there's an account here for rent expense, 1,100. So we got 57,210, if I'm right. 350. You gotta balance it. It's just, you know, when you got thousands of transactions going on and you don't balance, or your computer doesn't balance it for you, imagine having to go back and balance all of that. It's better to just stay on top of it and keep running balances in your accounts. Yeah. Good job. Okay. On the 25th of February, we received an amount from the client that was billed on the 12th. So you got to go back. You have a record, right? You're going to go back and look. Okay, we billed the client on the 12th $10,000. Now we received it. Okay, so what does received mean?
As cash.
Yeah, cash is going to increase, right? So we got a payment of $10,000. I'm going to put $10,000 into cash. Now the client no longer owes the $10,000. So what do we need to do? Minus what account?
Accounts receivable.
Receivable, right? So that's AR here. Client no longer owes the $10,000, so we cannot show him owing it. Now we don't have to do anything to the other side of the equation because that's a wash, right? That all has a one side of the equation. We just have to do the math to get the correct balances. So we don't have anything owed to us anymore. Looks like we still owe 9,900. Yeah? Oh, I made something wrong. Oh yeah, look what I did. I subtracted from the 67. There you go. So be careful. You start saying the word subtract and then you're subtracting the wrong account. Okay. 227. Paid full amount of accounts payable created on February 7th. Well, yeah. Okay, what do we do? If the accounts payable is 9,900, minus, right? You're going to minus. But you might want to work in the order of the sentence, right? paid means what?
Take from our cash.
Cash is going to go down, minus 9.99. Okay? And if we're paying off what we owe, we no longer owe it. We're going to subtract. Right? We're going to zero out that account. Okay? So what do we have now? 58,210? Wait. Who is a mental math person? You know, you got a little calculator here too. You can pull that up at any time and go 67,210 minus 99, and then I'll show you a little trick. Right? Once you got that number, you can put your cursor where you want that number to be and do this little backwards L-shaped arrow, and it puts the number in there. So you can use that.
Where was the calculator again?
Under here.
Sorry.
Question help
Oh.
calculator. Yeah. So this is 0. This is 350. 99. This is 0. 55. 0. 14.
Do we also minus it from the accounts payable?
I did.
Oh, okay.
You see where I did that?
Yeah.
Right here.
My bad.
Fantastic. Oh. Okay. And then on the 28th, we have cash dividends of 2,500. So cash dividends are paid out of cash, 2,500, and then the dividend account is going to increase by 2,500. Okay. And if you want to use your calculator, that's how you do it. Go 57,210 minus 2,500. And you can drop that number in like that. Okay, then it's a matter of getting your balances. Check answer. Fantastic. Okay? Then what they want me to do now is they basically want me to add up the asset side and the liability and equity side, and it should balance, right? So we'll use our calculator. I'm going to add up from here to here, these four account balances. So cash, 54,810, plus 0 in accounts receivable, plus 350 in office supplies, and 9,900 in furniture. So I get 65,060. And then I'll add up this side of the equation, and it should equal. If it doesn't equal, then we're in trouble, right? Now pay attention, right? Some of these are minuses. So this is 55,000 minus 2,500 plus 14,000 minus 1,100 minus 340. Ah, it equals. Well done. Okay. So we basically have recorded transactions for the whole accounting period. Now we got to make the income statement. So this is just like I showed you, right? Company name, what the statement is, and is it February? Yeah, for the month ending February 28th. And then we'll start with our revenues, and we should have service revenue. And then you just come up and get it from your account balance. Service revenue is 14,000. And then you're going to have expenses. Expenses are rent expense and utility expense. So we'll have rent expense and utility expense, and those are 1,100 and 340 respectively. Just like I did in the spreadsheet the other day, right? So you have total expenses. Wait a minute. Huh. Does it not give me a option here? Down here, I'm sorry. So 1440. So if I take my revenue and subtract my expenses, I'll have my net income. 12,560. Okay? So that's why we do that. We keep all of those transactions in accounts, so we have the account balances so we can make the financial statements. Let's see. Okay. Then what's the next statement after income statement? Statement of retained earnings. Right, so we'll head that up. And it's a brand new company, so they didn't have any retained earnings to start. And they had net income for the month coming from the income statement of 12,560. So there's a subtotal of 12,560. Now, were there any dividends? Yes, I had a dividend of 2,500. So we're going to subtract dividends of 2,500. So we'll have 10,060, right? Yeah. Does that line up? If in doubt, use your calculator. Parentheses are throwing my eyeball. Yeah, okay. Fantastic. And then finally we do the balance sheet. So we got shown CPA, balance sheet. How's the balance sheet different in its dating? It's as of a specific date. So we'll just make it February 28th. Okay. And then we can do assets over here. I don't need that up anymore. And my assets are cash, receivables, supplies, and furniture. So we can go cash, accounts receivable, supplies, and furniture. And we can bring those balances down. 54,810, 350. $350? Oh, we only have 3 because there's a 0 balance in accounts receivable. So we can go yeah, we only got 3. And the last one is 990. So we'll call this office supplies. And my assets should add up. You can re-add them with your calculator if you want, but if I'm pulling those numbers down, then my assets should be 6560.
Can I see the retained earnings?
Retained earnings is right here.
Thank you.
Yeah. And this would be my total assets. Okay, and then if you come over and do liabilities, we only have one accounts payable, but there's nothing there, right? There's a 0 balance in accounts payable. So all we really have to do is our equity section, which will be made up of, what are the 2 equity items? Common stock and retained earnings. And it says common stock is 55,000. And this is where you got to be careful. You want to make sure you pull your retained earnings from the retained earnings statement. So 10,060. And if you add these two, 6560, it balances. Let's say check answer. Okay, make sure each line of the balance sheet is properly labeled. Oh, you know what we forgot to do? We forgot to say total stockholders' equity and make that subtotal there. And then say total liabilities and stockholders' equity, because that's that side of the equation. See? Okay. So now I'll show you something.